the opening. But for those of you that didn't, at Animoca, we do a wide range of investments in many verticals. I think perhaps one of the common misconceptions is that we only do GameFi and NFTs. That has not been true for many years. We now actually have a portfolio of over 550 companies, and that's rapidly expanding. So yeah, we do quite a few different types of investment across the entire spectrum, from sort of very, very early checks to follow-on, and we do that through different groups. We've got an actual ventures team who have external LP in. We also have our balance sheet investments, so I sit on the balance sheet side. Thanks.
Hi everyone, I'm Rick from Outlier Ventures. We're the largest Web3 accelerator. I think we fight with Animoca every year to whoever has the largest portfolio base. So we have 300 companies in portfolio. I think you guys are a little bit bigger.
For now.
Yeah.
We'll keep competing.
And the way we work is we now work at the capacity of running 10 to 12 cohorts every year. So we invest in about 100 startups. And we do accelerator programs so that we prepare them around the seed stage. We invest 100K in each of them. And we've been investing across many different verticals with all kind of partners. Myself, I'm the accelerator lead, and I'm leading the deep-in program with my partners are Peak, Layer 1 for deep-in, and Borderless Capital that co-invest with us as a venture partner.
Hi everyone, my name is Ding Han, and I'm from J Square. I'm the partner at J Square. So J Square is a crypto VC that has been around since 2017. And we are early investors in Ethereum, Polkadot, to latest some of the AI infrastructure such as Ginseng and Render. So so far we've have like a couple of hundred portfolio companies, and we invest in early stage. We help the founder of the project to grow together. Basically, like we try not to be like an accelerator or incubator, but we do help portfolios to just give them like the resources they need to along the journey. So yeah, we are very like a founder-focused VC.
All right, thank you guys. So let's first start off the topic with the hot trend at the moment. Everything is pumping. The market is going crazy at the moment. Everything is going green after Trump is elected. So can you share some insights on what's your view and outlook after the US election? Do you have like any shift in your focus, in your trends after Trump is elected?
Perhaps I can go first, but we have a very straightforward framework, I think, in the way that we look at markets, right? And that is liquidity plus certainty equals price appreciation. And I think every time we see this 4-year election cycle, one of the biggest things is, especially in the run-up to it, uncertainty is increased, right? So the moment the election's over, actually, regardless of outcome, certainty goes up, and therefore prices, in theory, could go up, unless liquidity gets pulled out, right? So our view has always been that regardless of who wins, markets are going to go up. It's just about how quickly and how violently they go up. So now that we are in a Trump era, that cycle is definitely happening sooner. And we do expect it to be more aggressive, more violent, and perhaps less sustainable. That might be another way of looking at it. But hey, it's here. Our bags are pumping. You know, we're likely to see 100K any moment soon, so that's definitely more on the upside. But yeah, the short answer is more certainty means I think the bull market's just obviously here to stay, and that's not going anywhere.
Yeah, I also see the results of the election in similar ways, so sort of a short-term difference in the cycle. If anything, maybe with Trump might be anticipated circle a bit more aggressive, a bit more euphoric. But in terms of narrative, at the moment we're investing mostly in DP, in real-world asset and AI. I don't think that changed the investment thesis per se, because all of those requires maybe a longer time horizon. So I think we wouldn't change the direction just because of the election. If anything, maybe real world asset could be the one that is the more impacted because there's more compliance um, elements that more favorable legislation in United States, but it's something very geographical. Since we invest worldwide, it's very minor the impact we took.
Yeah, I think the election, as Shan said, I think it's just like a make uncertainty become like a certainty. So what does that? What that means uh, like the market knows like where uh, the macro trend is going towards in the next 4 years at least. So obviously like a Trump administration will be more friendly to the general like crypto market. Actually, more friendly to the general like capital market, I think, because of his policy about like a tax reduction to business, because of his policy about like further reduce like the interest rate. So these are like a very active signals to the to our industry, to the crypto and Web3 industry. In terms of like what's actually coming up, I think there's some uncertainty there. He certainly made a lot of promise while he was in like the Bitcoin Nashville, right? So we'll see if he will really use the U.S. Treasury to buy like Bitcoin, right? So I think it's going to be like a tremendous change if he really do that, because no government has done that, like no major government has done that before, and the amount of like money available there is like going to be like huge. So we'll see. That's one of the uncertainty there, and also I think the uncertainty there is like about the so-called compliance or regulations around cryptos. We know. I think the big difference between like the Kamala and Trump's administration is basically like Trump is like the new administration is willing to work with the industry to set up a framework to tell the industry like participants like what's in the framework, compared to like previously like we don't really have that framework or have the border. So when entrepreneurs are doing things like, I mean, like being an entrepreneur is already hard enough. Being like a Web3 entrepreneur is like extremely hard because you don't know where's the boundary, right? Like you don't want to cross that boundary like for legit like entrepreneurs in Web3. But if there's nobody is telling you like where's the boundary, that's going to be very difficult. So we'll see whether like the new administration can really like put up like new frameworks about crypto regulations and tell people what's right and what's wrong, and what's allowed, what's not allowed. But at the same time, remember, I think what's Trump's big thing, he's like always American first president. So I'm not going to be surprised if he's going to give like some kind of advantages to US, like US-based Web3 companies. So like for like entrepreneurs outside US, like I think most of the entrepreneurs need to play by US rule, because US is the only country in the world have long arm like enforcement rights. No other country really have that rights. Maybe China or like have some sort of rights, but really US is the only one who have the long arm like enforcement rights. So of course like it's not ideal for the crypto industry, because like remember like when Satoshi created Bitcoin, it's not what we wanted, but that's also the only way like the traditional money like can come into our industry, because like traditional money hates uncertainties. They want certainties, right? So they if we keep like to be a niche industry, nobody's gonna care. The industry won't grow. I think so. This is like the kind of the trade-off, and hopefully we all have like a better future.
Right, so some great insights there. So apparently, Trump is better for crypto, pretty much. And so Bitcoin is going up, more institutional money flowing into major assets and blue chip assets. Everything is going up. And yeah, in more favorable terms for US-based companies, since Trump is like US first kind of policy. But we still have to stay in touch of like whether all the regulations and all the policies can be executed, right? And we have to see how sustainable it is. So, so besides the Bitcoin ecosystem, which verticals or use cases do you see as like has the potential to be the next big thing or the next big in the upcoming Trump era? And also like what's unique about it and what's game changing about it?
I don't know if this is specific to the Trump era per se, but I do think that the narratives that are already budding are just going to get stronger, right? So what does that mean? It means things that are very, very consumer friendly are going to continue to be hot. You know, I think from a VC perspective, things like infrastructure, AI, DeSci, DeepIn, they're all incredibly investable. But when we think about what is Binance actually listing, right? They haven't listed anything for ages, and suddenly they list a bunch of meme coins. And that's all they care about right now, right? Because that's where all the attention is. And so I think it's going to be very consumer-facing things that will either bring very high trading volume, i.e. meme coins, or it's going to be anything that can capture high user value, right? So I think the Todd ecosystem is a perfect example of this, or specifically Telegram, right? There's a reason why everyone got very excited about Catizen, because all of a sudden there were this brand new user base that could be activated and brought on and into Web3. So I think we'll see similar narratives like this. And look, maybe it's not going to be as big, but the narrative around things like Kaya are exactly the same, right? It's the same kind of approach. So I think we'll see many of these kinds of plays that actually get good traction, at least at the beginning during this era.
Yeah, for us, actually, the way we structure investment thesis is really inspired by our portfolio. We've been in the business since 2014, and usually what happens is you get success from the previous cycle kind of driving the new programs. So for example, when it comes to AI, real world assets, and DeepIn, we've been investing in those before they were trend, before there was even a name for it. So now when we go out with a program around artificial intelligence, we have more credibility because we are early investor in Ocean Protocol, Fetch AI for real world assets because of Boson so far and so on. Just a few programs were more like inspired or chasing the markets recently, and it's more like on the Bitcoin program for all the ecosystem around Bitcoin and Zero Knowledge program that we've been running. But this is pretty much what the market is telling us, what our portfolio is telling us to drive our attention. One thing that I wish we would be doing more, and I'm pushing within Outlier to be investing more, is to open something more consumer oriented. So if it's looking back on the forecast from the previous cycle with the level of maturity of the industry, I wish the current cycle to find more builders that would be building the apps for retail users. I think there is maybe too much focus on infrastructure, and I think the VC themselves are guilty of this because the capital allocation. So I hope something changes soon for better consumer application, to see a bit more dApps and a bit less chains. And
I don't think that's slowing down.
it's more like a wish than. So hopefully something that we're gonna see. So one thing that personally, but it's more like personal excitement more than speaking on behalf of the company. I think adoption will go through mobile. So dApps with a strong viral social dApps. They have mobile first, retail oriented. I think we're gonna get one or two of those that can drive the market during the bull run.
So yeah, for J Square, I think we are particularly focusing on two areas. Like one is like as the guests, as other guest speakers talk about, is like AI, and cryptos. So I'm not talking about like AI meme coins. I'm talking about like real, real projects that can help like AI. Because like we know like AI like right now basically is dominated by like 3 or 4 like large language model and platforms. But like there are still like a lot of like AI agent layers, and there are lower layers like that can serve like billions of like users potentially, and it doesn't have to be like centralized. Like there's some use cases that can be decentralized from like the data collections, from like the identities, from many different areas. So I think there's a huge opportunities like the Web3 entrepreneurs can do in the AI plus like Web3 verticals. Another thing I think we are pretty focused on is like the payments. So we feel like we already feel the trend, like and we feel like, for example, like the stablecoin payments across global networks will be 10x, even 100x in the next few years. It's going to basically change the, at least take a large market share of the traditional like SWIFT transactions, and it's actually already happening. And I think most of you have seen like the Stripe acquisition, like $1 billion acquisition just last month, and that's a very strong signals. And of course, for like a lot of these payment infrastructures, it's already there. It's already been built in the past few years, and there will be like dominant players. They have like the first mover advantages. For example, like Stripe's acquisition. For example, like all the major crypto exchanges, the stablecoin issuers like Tether or USDC circles. So they have like first mover advantages, and they already gained like the kind of trust and reputations in the industry. And but that doesn't mean like there's no opportunities for like smaller entrepreneurs. Because imagine if like the stablecoin or payment the Web3 payment ecosystem is going to serve like billions of like users around the world. There's a lot of like different like areas you can build around those like stable coin or payment systems, whether that's like altcoin payments or whether that's like lendings, all the DeFi things. Like it will be different than last cycle of DeFi, which is just within the crypto industry. It will be like a more massive and more disruptive like DeFi infrastructure.
Yeah, so I do agree that I think this cycle will see more of the middleware and consumer apps thriving in this like market condition compared to a previous cycle that a lot more infra, a lot more chains, we're gaining a lot more investments. So in terms of like investment selection, like how do you filter good investment from bad investment? What is narrative? What is like substance? How do you filter deals?
Yeah, good question. I mean, our approach is very thesis-driven. So we typically go deep into a thesis for like a very short period, and then we get very active, right? So Ton's a good example of this. When the opportunity to invest in Ton Foundation itself came along, we invested in Ton, and then we started investing quite heavily in the ecosystem, right? So we kind of take a very similar approach, where it's like we have a strong thesis, and then we just try and find the best projects we can within that. Now, what does it mean to be the best project? It is a bit of a numbers game, I'll be honest. That's partially why we spread so many bets. But a lot of the time, it's about finding, of course, the strongest founders, right? Have they actually got a demonstrable history of developing something, delivering something? That usually pushes them quite high up. And then the second is, one of the things that has changed for us is how easy is the founder to work with, right? Because we've actually had this issue come up time and time again, where we do try and support our portfolio companies, but if we can't work with them, and more importantly, if they can't work with our other portfolio companies, that actually doesn't add to the network effect that we're really trying to build within our portfolio itself. So those are probably like a couple of the more bottom-up things that we look at.
Yeah, I'm gonna say it's gonna sound like very just like a motto, but I would say founders, the founding team. One thing though, because I don't want to give like the typical vanilla answer, like one thing that out of experience I personally learned about what makes a good founding team, because it's difficult. It's easy to say founder, it's difficult to justify what's good founder. Sometimes it's counterintuitive, but even first-time founders, sometimes they have bigger motivation than serial entrepreneurs. It's true, serial entrepreneur, they understand the importance of go-to-market, but when you're first time that you have to learn everything from scratch, sometimes you have the motivation to always go the last mile. So like we look at also like first-time founder with an eye of respect, let's say. And the other thing is, especially talking from the DB in space where it requires a lot of industry knowledge, that's also something that sometimes is overestimate in a way. You will see from statistical evidence that a lot of time, like just curriculum doesn't really translate directly into who's gonna be the market disruptor. I'll make an example like Aquest. The moment I saw the founding team, for me it's very important to see the chemistry into the founding team. They're hard worker. They see like they're putting their soul into that. So if I have on my table the pitch deck of the Aquest team and some guy that maybe has 30-year experience in education from Harvard, that on paper be like, oh yeah, this is the education king. I would have no doubt to go through Aquest. They're gonna be a big deal in the industry. So especially like you will see from the very first call when you perceive it, when there's a strong chemistry in the team. There is no way that they will lead the project. They have more resilience. So I think it lies between those lines what makes a good founding team, especially early stage where we invest. That's the most important thing.
Yeah, so I think I would just echo what you say, like founders is super important, obviously, and you've covered most of that. I think there's like one very important characteristic from the founders, which is I think the persistence on and be passionate about the things, like whether you are like a first-time founders or second-time founders. But hopefully, like you are not like what I've heard someone say, oh, this is my 6th or 7th crypto project. I'm like, dudes, like like from the real, like we'll probably only have like 6 years from the real like crypto project from day one, right? So what does that mean? Like there's a clear line between like, so as a VC, like we are making investment, and there's a difference on making investment versus making money, right? So making, of course, for as an investor, we want to make money, but making money is not our only goal. I think that's very clear. So that's why we call it investment, not making money. So investment, including investing in people, like you don't have to success at the first time. Like you will have second chance, and we would love to see like the founders' growth, and also like investment means like at the end, like there's some real product to be built, not just like a pump and dump. Of course, like some people can make money on pump and dump, but what does that like really help our industry to move forward? Not necessarily, probably like the opposite. I think that's so like we are like very long-term looking investment VCs. So we want to back like founders like have a long-term plan rather than have like a 12 months or 18 months plan for a project. So that's very, very important. Second point I want to highlight is like I think as our industry evolved, like it's been changed. Like previously, most like 99% of our industry project were relying on like narratives. Like there's like very few real products that people really can use, and there's very few like real business models can have like a long-term like value of the project. So I think, but time has changed. Like as I say in the beginning, like there will be like clearer like frameworks from the compliance and regulation perspective. I think like getting listed probably in the future will be becoming more difficult. It will probably like not exactly as a traditional IPO stock market, but I'm sure like there will be some frameworks there. So I think like we are looking at projects that have like clear like business models, have long-term plans like how to make revenues in, and then of course like execution on those plans will be very important characteristics from the founders. So yeah, these are the 2 points I want to share.
All right. Since we're coming to the final parts of the panel, any last final thoughts and advice for builders trying to raise fund in the next few years and in this cycle? And how can they prepare for what's to come?
Yeah, I'd say given that we're coming into the bull part of the cycle, the pace at which you execute does need to go up. In a bear market, it is very possible to take your time and actually build properly, move a bit slower, be more thoughtful about things. In a bull market, things move very quickly, right? So if somebody is interested in talking to you, strike fast because their window might shift very quickly. The market narrative might change very quickly. You have to be really quick at actually striking and getting forward. And that goes for launching and building things as well. Unfortunately, the market, again, will move quickly. So if you're starting to get some kind of indication of interest, just start shipping and don't try and wait around and perfect things.
Yeah, one thing which is a danger on the line for founders sometimes is to manage to close fundraising at a valuation that doesn't reflect your value. And while it seems silly to say that, it can bring problems down the line. It can hinder your possibility to raise a fund later on, especially when you're gonna need it in bear market to sustain valuation. So don't just take too much advantage of bull market. It's in your interest. You don't see it now, but it's gonna be there later. And yeah, try to be pessimistic when it's bull market, optimistic when it's bear market to balance it out, and try to plan your burn rate carefully now that it's bull market to cash in your value so that you can plan for the winters.
Yeah, I think my take on that is I think it's going to be a little bit different than other speakers. I think it's like, don't try to time the markets, right? So who knows how long will be these bull markets? It may be 1 year, 2 year, or 3 or 4 years. Nobody can time it. So if you can really time it, nobody should be sitting here, right? So just bet on the market. So I think it's just focusing on your products. Of course, doing things in the bear market is going to be harder than doing things in the bull markets. But it doesn't mean you. I think if you see all the greatest Web2 companies in the world right now, they all come up from the very difficult time, from the late 90s internet booms to the 2008 financial crisis. A lot of great companies are born during this crisis, because that's really when you can tell the founder, the team, or the project can survive or not. So if the founders really want to build something in long term, just echo back to what I say, we are making investment, we're not, and we want to make money through investment. We don't want to just make money. So I think have a long-term mindset and respect the market and don't time the markets, and just focus on what you are doing and have a clear business model, focus on revenues, build something useful for the users. I think that's more important, and I think that's my suggestion.
All right. So I think that wraps up our panel today. Thank you so much, all the speakers,